All right, welcome to another episode of Builders, Budgets, and Beers. Reese and I are back for the first time in 2025, and we have a longtime friend, Tim Savre, on the podcast. Tim cut his construction finance teeth at month end with our good friend Chris Anderson and has since moved on to the flashy NS Builders out of Boston. You might know Nick Schiffer, who runs the Modern Craftsman podcast. And what did we talk with Tim about today, Reese? Or what are we going to talk with Tim about?
Yeah, what are we going to talk to Tim about is why it seems like the roadblock is we got to get ready for taxes as a contractor, but really unpacking what creates that type of mentality of getting ready for taxes at the end of the year, or beginning of the year rather. Going through, the importance of tracking costs and expenses consistently throughout the year, doing month-end closeouts consistently, understanding cash positions, understanding what the P&L and the importance of looking at that on a monthly or quarterly basis will do for you. There's a lot of good stuff in here that ultimately compounds up into this big rush at tax season.
Yeah. I think basically, like, in the spirit of tax season right now, what we're hearing from a lot of builders out in the market is just, hey, I'm busy right now trying to prepare for taxes. And what we talk about today is how essentially a lot of people think the only reason to close your books every month is so you can have accurate financial reporting for taxes, but there's a lot more beyond that. And There's a lot more of a reason to close your books regularly. So that's what we talk about today. I think it's a good episode. Let's get into it.
Tim, love having you on, dude. Super
Thanks for having
excited.
Me, guys.
You're just a wealth of knowledge. Can't wait to tap into it for our listeners. Well, let's just have you dive in. Give us a little background on yourself, Tim. Don't go too long. Long intros kind of become a snooze fest. Give us a little how you got into the industry, background, who you're working with now, your MBA. Keep your social security to yourself. Keep it short, 30 seconds. Let the people know who Tim Savre is.
Yeah, it's a couple of friends, actually. We all race bikes professionally. One of them was a controller of a home building company, and he saw a need for this niche. And we all came together. We worked on a project. I kind of spun off my own direction about a year ago and joined NS Builders. So we're out of Boston, and I've been the controller for Nick out there for the last year. And we're using Adaptive across several of his companies.
Love it. No, we don't want this to be a big Adaptive plug. Okay. I always like to preface that. Yeah. So we want to talk action oriented takeaways for the listeners. But that's great. You're working with old Nicky Schiff up in Boston. Great guy.
Yeah, building some fun projects right now. We got a big custom $10 million build going on, so we're staying busy.
Love that. Well, cool. Well, let's jump in. Tim, I thought it would be interesting to just with your background, the number of builders that you've worked with, obviously, your focus and skill set today with Nick and the NS team. I wanted to hear your take on, we'll just call it tax season. Okay. I figured it'd be fitting this time of year. We hear a lot of builders that get kind of stressed out about it. A lot of office staff is kind of like this hustle, race to the finish line, up against the clock type mentality in Q1. And I wanted to hear your take on it, why it happens, how to prevent it. What are the important pieces to focus on?
How to prevent taxes?
No, how to prevent this rush, right? How to prevent the rush. I mean, hey, we can get rid of taxes. I'll keep that comment. I was going to let fly to myself. But Tim, open it up. Run it where you wish.
Yeah, I mean, really, at the end of the day, you got to get your tax return done, right? But you can kind of let your financials slide if you personally aren't going to make any business decisions from them throughout the year. And all of a sudden tax season comes around and everyone's like, oh crap, we haven't done anything, or we're not staying up to date. Where mostly the issue is transactions are not getting classified. Here, home building, we're not getting them draw costed. So there's all these transactions sitting out there we can't reconcile, and the whole system is just backed up because of that one simple process of we got to get a receipt, we got to get it in the system, and we got to get it coded. Sounds so simple, but it's so challenging to get them all done.
Well, Tim, before this, you were at month end. You worked with hundreds of home builders, right?
Mm-hmm.
And you're saying that for most of them, when taxes come around, it's that's when people are doing all the coding. They're not doing it over the course of the year.
Yeah, I mean they're doing some of them, but usually there's this huge backlog adding up. Sometimes they call it suspense or missing transactions, whatever you want to call it. But there's usually hundreds, if not thousands, of transactions that have still not been coded come around December, and then everybody's scrambling and trying to figure out, okay, where do these all go? Have we invoiced them to our clients? Have we gotten paid? Have we paid the vendors? So that's always a rush at the end of the year, and trying to solve that problem has been top of mind for, I think, a lot of accountants for a long time.
My question: thousands, hundreds. Why even mess with it? Like at that point, I'm looking at myself and I'm like, I'm not doing it.
No, that's a great question.
Let it be gone.
Well, if you're a fixed price builder and you just want to call it cost of goods sold or revenue, maybe you can do that. But for anyone who's cost plus, if you're not sending that to a job, then you're not getting paid. If you're cost plus 20%, every dollar that you miss coding, you're probably losing $1.20. It adds up in a hurry. Even a couple $1,000s of receipts, and all of a sudden you're like, why did I not make any money this year? It's right there. So it's crucial for all those cost plus builders that they got to track every penny.
It's that classic old adage: you can't plus what you don't cost. But in that regard, I mean, to me, if you're a cost plus builder, and as you phrased it, what is it? For every dollar that you don't invoice for, you lose $1.20. If that was the right way. I mean, I feel like that's a pretty strong stick to motivate you throughout the year to run tight categorization. But you're saying that that's not always the case.
You'd think, but it's like pulling teeth to get everyone to get all those receipts in. It's usually, there's some that are lost, and it's a matter of going back to Home Depot, calling them up and saying, hey, we need copies of these receipts so we can job cost them. But yeah, you'd think that we'd be on top of it, but you'd be surprised how many receipts will be out there at the end of the year.
For sure. Dr. Dollar, I see you kind of stewing over there.
Well, I'm just thinking about from the audience perspective, as a construction business owner, right? I feel like a lot of the customers we work with, I don't know if they're waiting until the end to do the taxes. I feel like they're kind of, I don't know, generally a lot of the more reputable businesses, or businesses that are a little bit larger, have grown quite a bit, understand that they gotta code at least stuff for invoicing, right? They understand the importance of being on top of it for invoicing.
Mm-hmm.
But then maybe what I guess I see, which relates to taxes, is there's less of an interest in the P&L itself, right? And the accuracy of the P&L. So I think there does seem to be a decent desire to code transactions for the purpose of getting reimbursed by the client, or for the purposes of invoicing, right? I totally hear you, Tim. I hear that a lot of builders out there, maybe especially smaller builders, are maybe not staying on top of invoicing as regularly, but a lot of the customers we work with seem to have an organized process around invoicing specifically, and staying on top of the cash flow. It's more, I guess the interesting part about tax time is generally people are oh, the P&L, I don't care as much about the P&L. I don't care as much about, my revenue minus my expenses, and looking at that regularly, which is ultimately what you're reporting to IRS for taxes.
Yes. And I'd say understanding profitability amongst the projects seems to be a big one that builders just kind of say it just seems too challenging, or the push isn't worth the shove. And a lot of times if I ask home builders, what was your profitability on a certain project, they can't speak to that.
Yeah. Yeah, you're right. I mean, look. Yeah, you're right. You're right on that point. That's true a lot of the time. I guess when it comes to taxes specifically, I guess why, something I've kind of acknowledged with a lot of our customers oftentimes is you want to get your transactions coded for the purposes of looking at project level profitability, which is what you talked about, and invoicing, being on top of invoicing, right? tight cash flow management cycle. Those are the things that like really, really matter, like understanding how projects are progressing and invoicing. But oftentimes I acknowledge that just from like a business level perspective, it's maybe not as critical to be looking at your P&L monthly, or there feels like less urgency or like understanding in the industry that they should be reviewing the overall P&L on a monthly basis or a regular basis. You're an accountant, you've done accounting for builders. Like, do you agree with this? You know what I'm saying? Like there's a huge emphasis on project reporting and then invoicing, but not as much on like reviewing company level financials regularly. And when we talk about tax time, it's like company level financials. That's what's going out at tax time. This is like the only time of the year where you need to have tight company level financials because you're about to submit them to the government and they need to be accurate, but is there a need to have accurate company level financials otherwise and be paying attention to them for a small construction business?
I mean, I think absolutely, because what happens in construction is a lot of times we're taking deposits up front. And if you're not paying attention to what's happening, you start off your bank account, everything looks groovy. You got a bunch of cash in there, but you don't realize, hey, we're actually losing money on some of these projects. And if you're not paying attention to that on a monthly basis and you're not whip adjusting those financials and really understanding, okay, what was my GP, not overall, but on those individual projects, all of a sudden those projects start to wrap up and you have to finish building and use those customer deposits to pay out all the vendors. And all of a sudden it's like, wait, we have a cash flow issue. We can't actually pay right now. What's happening? How did we have $1 million 2 months ago and now we have nothing? So I think it's crucial to stay on top of that on a monthly basis and have some type of cash flow and for sure a WIP report going.
Can you explain this a little bit more, like the deposit example specifically? I think this is a really great example. It'd be great to kind of unpack it a little bit. How, with the deposits, you might think if you're just looking at an estimate versus actuals report, you're like, oh, I'm good on this job. But actually you're behind from a cash flow perspective, and how the financial statement's correct for this.
Yeah, so it's really important to, of course, look at what your expenses are on the project and what you've actually invoiced. And the example I like to give a lot of times on tax time is actually if you take a deposit on 12/31 and you go ahead and just pay taxes on that money because you have no expenses against it, you're kind of just shooting yourself in the foot because you're paying all this income tax on money that you haven't really earned yet. So if you're not WIP adjusting, you need to be able to delay those taxes because otherwise you're going to pay all that tax up front and then you're going to come to next year and say, okay, well, now what? I don't have any money anymore. I paid taxes on $200K. I need to finish this project. And it kind of snowballs and gets out of control if you don't have a good handle on it.
Okay. Yeah. No. So I think this is a great. This is another great. I mean, this is like a tax consideration, which is a really interesting one. I guess what you're saying is like, oftentimes there's this idea that generally, like, I'm just going to track money I've collected on a project, money I've spent on a project, and just pay attention to that, right? And that's going to be my estimate versus actuals, whatever. So I collect $500,000. Great, I've collected $500,000 on this project. Cool, I got $500,000 of revenue. You're saying, hey, no, when you actually apply the financials lens to this, and we're actually really focused on the P&L/balance sheet/monthly financial reporting, we're going to correct for this because while we've collected $500,000 and we have the cash, we haven't earned it yet. So it's not actually revenue. And if we're updating our financials, it will reflect that. It'll say it will not show $500,000 in revenue. So when you're comparing these reports, you look at your just project report and it's like, I've collected $500,000. Great. This project, I'm $500,000 in the green or in the black. I guess we should say the green. I like the green better than the black.
I like the green.
Yeah,
I like the green.
The green's better. $500,000. But then if you're like, no, I care about updating my financials regularly. You're making the adjustment. That's going to go to some like deferred revenue account or whatever on the balance sheet. Yep. And it's going to be removed from the P&L. So in this case, your P&L actually does help you quite a bit because now you look at your project report and you're like, I made $500,000 this month. Great. You look at your P&L and you're like, actually, I've made no money this month. This is my accurate, true view of my financials. So back to this original question of like, why should I care about financials monthly? This is a good example why, right? I think on top of that, you also just made another argument for why, which is back tax related, but we can kind of come back to that.
You should go into accounting, Matt.
Oh, yeah. I mean, I kind of am, I guess, every single day.
Yeah,
Kind of
that's true.
every single day.
Middle word
Yeah,
of this
there's
podcast.
two
Budgets,
concerns.
maybe.
There's two issues at hand, right? Is one, you don't want to pay more money than you have to in taxes. Secondly, you don't want to finance projects for your customers. You could actually have the reverse be true. You could be way underbilled and you're borrowing cash, or maybe you're not even borrowing cash, but you don't have that in the money market. You're not making any interest on your profit. Instead, you're actually building the project and then you're getting reimbursed later from the customer. That's not good business. You don't want to be doing that. So
Yeah. Yeah, I think this is an interesting one again, though, where I think that point you just made again is one where I think builders will recognize the importance of what you're saying. Like heads will nod. No one's going to disagree with you that they shouldn't be underbilled. I think that what maybe is not as well known is how updating your financials every month helps you realize whether you're underbilled, right? Like it's not just this like thing that's only for the end of the year just for taxes, basically is the point that I'm getting at. Like doing this regularly and looking at it helps to uncover areas where you need to be focused, right? If you're actually doing your whip adjustment every month, you're going to know if you're dramatically underbilled because it's part of your process.
yeah, throughout the year, we want to be doing the financials monthly so you can make smart business decisions. Like, yes, at the end of the year, if you're doing it all along, it's going to make it easier to send off that tax return. But if you just wait until the end of the year and do it, then I don't know how you're making management decisions throughout the process.
Yeah. Yeah, exactly. Yeah. Reece, what do you think?
What are some examples? Well, I'm following along, and I'm going back to like the applicability of this, right? Because I think a lot of this content is out there. Maybe it's not out there, but when people hear it, they're like, "Okay, sick." Now that I know that I should be doing my whip adjustments every month, like I don't know how to do it. I don't know why I would do it. When you take about like, I don't know how you're making management decisions or business decisions throughout the month, Tim. What does that look like on a month to month basis, or the benefit of running whip on a monthly basis to make better business decisions on? And then ultimately, like, how does that impact come tax season when you are like looking at the business after the year being like, how did we deal?
Well, I think there's three things Tim's brought up that he can touch on the applicability. So I just want to make sure because we've already talked about them. Reece
maybe I missed.
Reece is just zoned out.
Yeah, that could be.
I'm just kidding.
Maybe that's yeah. Let's hear them. Do a recap because I'm like whip adjustments.
Well, I think there's three. You can explain them, Tim. I think we started this podcast talking about tax time, but really, I think the point of this is that like it's not just about tax time. It's about staying on top of this regularly. Obviously you'll then be prepared for tax time, but the importance and why, which is Reece's key word here, which is applicability. Like, why would I do this, right? Aside from just taxes. I think Tim gave a good example of like the tax considerations if you're not on top of this, like accidentally reporting a deposit as revenue and paying taxes a year in advance, like before you needed to. That's like a tax-related reason. So this is like one of those three reasons Tim brought this up. Like, why would I stay on top of this? But the other two I think he's already raised is getting an actual accurate view of your profitability as the year is progressing. So you know whether your business is actually making money, not just has collected money, right? And then the second thing is WIP is not just like a report you look at the end of the month. It is to give you a sense of whether you need to create an invoice, basically, right? Like whether you have a problem with cash flow right now, whether you are under optimizing your cash flow. So anyways, I just wanted to call out that we've already touched on two good examples. And I think Tim, you could explain them a little bit more rather than introducing a new example. So yeah.
Yeah. So, I mean, to talk directly about that on your whip, if you see that you're underbilled, that should be a red flag right away that says, hey, we need to create an invoice. Why are we underbilled on this project? Why have we spent more money than we've invoiced? Of course, like a little bit is one thing, but if we're more than 5% underbilled, something's going wrong. Like either we're not timely entering receipts, we're not invoicing timely, like there's an error there and we need to fix it, or we need to take a bigger deposit up front. And if that deposit up front is as big or bigger than what one of your invoices should be on your monthly cadence or bi-monthly cadence, then you're going to make sure that you're always covering those expenses before they would add up to be more than the deposit and you'd invoice again, if that makes sense. So I think I see a lot of builders making that mistake of not taking a big enough deposit where right at the end of the month before the invoice, they're actually underbilled. But if you're underbilled across 8-10 projects, all of a sudden you're underbilled by $300,000, $400,000. A lot of builders don't have that kind of cash just sitting around.
And I think that's kind of like my question. Maybe I mean, yes, thank you for the breakdown on this. But like, I'm even thinking more simple because this seems really easy. Like, avoid paying taxes on money that isn't yours, seeing if you're actually profitable, and then knowing when to invoice a WIP adjustment, right? Like those are the three big ones.
I think kind of the last piece is planning, right? So you kind of want to back into what is my goal for the year? What are we trying to do? Mm-hmm. If we're trying to hit X revenue and we know our GP, we need to be able to back into our projects. We might say, okay, if our goal is to do $1 million in profit and we know what our GP is, and we know that typically our projects are $1 to $2 million, how many projects do we need to do to hit those numbers? The CVP is the name of that exercise. You kind of go through and you backwards plan to figure out, like, this is what I want to hit. How do we hit it? Well, if you don't have those numbers, how do you work it? How do you back into that?
Mm-hmm. What's CVP?
Consumer volume price modeling. Let me confirm. CVP, using acronyms I don't know the names of.
Yeah, and it's like
customer.
Okay, go ahead.
Customer volume price.
I think customer volume price. Okay, this is great. My point, and what I really want to drive home for the listeners is, and this is like total happenstance. I was just thinking about this. I was like, I saw a post, and it's from Nick Schiffer. Mm-hmm. Like, again, not just like NS heavy on this podcast, but it's like happenstance. Nick posted 20 hours ago. I was researching why most small, under 10 million revenue home builders fail in business. Anyone want to guess what the research says? It has 18 comments. And some of the most popular and the consistent answer in this thread is not understanding costs and how to manage finances. Builders nail construction, but miss on pricing, cash flow, saying no. It's almost always a cash flow issue. People focus too much on overall revenue. And so it's like we have these three examples of like what makes sense, but why is that the common understanding? Like, what's the why behind it? Aside from just knowing, I don't want to pay taxes on money that's not mine. I want to see if I'm actually being profitable. These three things, but why is that the challenge? Why is that the consistent theme for people to stay on top of knowing their cash, ultimately resulting in this big scramble at the end of the year for taxes?
Yeah, I think the reason it's so hard in construction is because your timing of money coming in and money going out is so far apart, right? I guess like in retail, you buy a bunch of inventory, you know what it's going to sell for, you slowly sell it down. But in construction, to try to model out, okay, what do the next couple months look like for invoicing? How much do we actually have on hand for customer deposits? What of those deposits, how much have we applied to invoices so far? Keeping track of all of that, I think, just becomes overwhelming for a lot of builders. And they go back to just doing, a lot of times I'll actually see they'll just open up bank accounts for each individual project, and they'll just look at the bank account number and say, well, if the bank account number is fine, then I must be okay on this project. But that can be misleading. You can get into trouble in a hurry doing that.
Yeah.
Why? Because you hear it all the time. Like, what's wrong with that?
Well,
go ahead.
I'm
asking the same question. Let's hear it. Yeah.
So Tim's point on planning, like how much money are we going to make this year, right? Like if I was just doing a cash-based analysis of how much money we're making, let's say like in Adaptive in our company, our software company, say that we sold all annual contracts, to all of our customers. And in January, like we collected 10 contracts, $12 each. I'm like, great. We made $120 this month, right? I'm going to multiply that by 12. Wow, I'm going to make a ton of money this year. because look at how much I collected in this 1 month. But really, you just collected all that money up front because you did an annual contract. You haven't earned it yet. You still have 11 more months of service to deliver to the clients. So our profit in the month is dramatically overstated if I'm just looking at money that came in through the bank account, right? So the problem with looking at your profit just on cash and what you've collected and not accounting for whether it's a deposit or not, for example, right? Whether you've earned the money, is then your numbers are not like consistent month to month. There's no consistency in like how you're working as a business versus if you take the approach to like adjust everything. Oh, that was a deposit. That's not revenue. That wasn't earned. I'm under billed. Let me like bring my revenue down or slightly increase my revenue. Then you can start to have consistency and look at your revenue on a month over month basis and see how the business is growing. And to Tim's point, you can actually plan for the future. Otherwise, you're going to have like huge spikes 1 month, huge declines the next month, and it just seems like this all over the place. So you can't really get a sense of what's actually going on.
And I think where builders, to your point, where builders get in trouble is when they have a bunch of projects that all wrap up around the same time and they don't have new ones starting. That's where they really run into those cash flow issues, because typically you get a lot of cash heavy up front and then you're paying subs at the very end. So if you have multiple projects closing, you don't have new ones starting, that's where all of a sudden the bank account goes down in a hurry and everyone looks at each other and says, what just happened? So it's scary. Yeah. I mean, it's not an easy exercise. You have to really be on top of it to do cash flow modeling for construction.
Okay.
Yeah, so basically financials, I guess we started talking about taxes, but financials aren't just for taxes, basically, right? Financials are for normalizing.
No, I mean, I'd almost see them I see them the other way around. Financials are how you make your decision throughout the year, and then you happen to have to turn them over to the IRS to pay your taxes. Whereas I think most people probably see it the other way. They see it, hey, this is for taxes, and then maybe I'll try to make some decisions off this information.
Yeah. Yeah, exactly.
Well, and that's where I think like this is like all like full circle stuff. I think it's good that like you identify that. I think it's like the big roadblock that you hear typically around this time of year is like, we got to get taxes done. But it's like, that's really just kind of the response of not staying on top of it throughout the year.
100%. I mean, honestly, if you're doing it correctly, what you need to do for the 12/31 month end close versus the rest of them is almost identical. There's very few steps that should change. So it should be just like closing a month any other month of the whole year if you're doing it. Stay on top of it.
And then if you're, again, like this is perfect world coming from like CPA, slick back hair, Tim Savre, right? Massively organized, loves numbers, loves doing this stuff. It's like, it's just easy. You just close out your books like you would every other month.
Yeah, I mean,
why don't they? Go ahead.
Oh, sorry.
Go ahead.
Yeah, you can skip it over. It's not even it's pointless.
What were you going to shift gears? Because I'm sitting here. I'm like, this is a lot of perfect world stuff, and like, I'm not working with a lot of perfect world, and I don't think a lot of contractors are either. So that's where I'm trying to get into this of like understanding that like, it doesn't have to be that way. There doesn't have to be this big rush to like, oh, we got taxes, we got to get everything done. When I got Tim over here saying it's easy, it's just like any other month-end close. We've tackled a lot of good stuff in terms of like why doing it on a monthly basis is important. The pieces that you should be looking at from a monthly standpoint are important. But then like it's simple. You get a receipt, you put it to a job, you put it to a cost code, done. And you do that 50 times a month and 30 times a month for invoices.
Well, that's not the only thing though. Like it's not just that. I think that's what Tim was getting at a little bit. There's a process that you go through to close the books and update things that is not just coding receipts. Like making a WIP adjustment can't be done through just coding receipts.
But you also can't make, to Reese's point, you can't do the WIP adjustment accurately until those receipts are in there.
Totally.
That's kind of, yeah.
Yes. That's like the base level thing, but then you need to do more on top of it. Yeah.
And I know we're not trying to plug Adaptive too hard here, but honestly, it's really helped me with the close. Like my clients that are using Adaptive, because you guys have the card feed that's pinging everyone and saying, hey, here's the receipts that are outstanding. Typically in the past, we had to chase everyone down every month and the list would be 100. Now my list is usually 5 to 10. And I just send out that list of 5 to 10. In fact, NS Builders, we had 6 receipts that I had to chase down on December 31st. So that we're done. I've turned the financials over to our tax return individual. And honestly, it's really helped us. Like being sincere. Otherwise, I'd have an Excel spreadsheet, probably 100, 200 receipts, and I'd be pinging everybody and be like, hey, we got to get these done. I got to get the whip done. I can't reconcile until all of those are processed. I can't create the whip until all those are processed. And that really holds the whole show up.
Yeah, but Reece, you were saying the point you were saying is like, it seems easy. What am I missing? Is that what you're saying?
I mean, I think that's like that. Well, yeah, like I understand the foundations of it, but that's like the point of the conversation is like, if it were so easy, the cash flow wouldn't be an issue. Mm-hmm. Like doing taxes wouldn't be an issue. That's really what I'm like trying to drive home is like, why, like, what are the day-to-day functions that prevent people from being able to just close books out in December 31 like they would August 30th or however many days there are in August, right? Which ultimately compounds into this big rat race. And I think we've talked about a lot of like the good pros, but I think this should like place an emphasis on the importance of the foundation, which is like running tight categorization and cost and expense tracking throughout a month, because that's really like the beginning point or the key to unlock everything else that you need to do your reconciliations, to do your month-end closes, to run your whip adjustments, to understand, like, you've got to know that stuff to place the emphasis for the listener of like, if you can't track cost, or that's where you're getting sloppy and you're running your Excel sheet with 200 receipts on there that you're trying to find, that's actually the problem at hand to focus on.
Well,
agreed.
Yeah. Well, I think
let's hear it.
I think here's my take. I'll let Tim add it on top. This is what I was saying. So I think that and I haven't made this clear, so I'll try to make it clear. I think that the biggest problem is that a lot of the business owners I've seen view updating literally updating the accounting software, like your financial statements, as something that is done just to report on taxes. Okay. So what does that mean? It means that there's very little urgency to actually update the financials, right? And so this is where it's like, hey, no, there's more of a reason to update the financials than just taxes. Yes. It gives you a lot of visibility into your business. That's part of what we were talking about. Without that mentality, a lot of people are just going to say, I'll deal with that later, right? And the point I was making earlier is because of the need to do invoicing and because of the focus on project reporting, I don't think people are like completely neglecting tracking costs. I think a lot of them are tracking costs. It's just that it often doesn't really flow into the accounting software, right? Or it does, but to like 80th percentile completion. And then there's like 20th percentile, like stuff is wrong. And then 12 months later, 12 months of 20% of stuff being wrong is like a giant complicated web to untangle.
That's like 240%.
Yeah. So that's what I think is like, is my like personal take on why this happens, right? Is people are like, I'm only going to do this right now for the purposes of invoicing, but I don't care about having like tightness or completeness in the financials, in the accounting software, because I don't really care about that until tax time. And that compounds over the course of the year. And by the end of the year, it's really complicated. And it's a giant, like, oh, now we're doing taxes. Let's redo everything we tried to do originally properly.
And it's really hard to go back because nobody remembers anymore. You have a receipt from January. Nobody can remember what project that was. So not only do you, like Teresa's point, have 240% to go through that month, but everyone's like, I'm clueless on what we're supposed to do with these at this point. So
yeah.
I mean, I think what's the term in like, you know,
that little noise you just made, Reece, was just like you're wearing Mark's Curious Builder podcast, and that's like Mark's little noise he makes.
Oh yeah, it was my chuckle.
Yeah.
Boink, or whatever the sound is.
Yeah.
No, wait, what is it, Matt? I think we're like kind of saying the same thing. What is it like in legal talk? Is like, I think we're pulling in the same direction. We're running by each other on the same lane, or whatever the hell it is.
The two ships.
Like, I think that's just like. Wait, say that again for the listeners.
Passing in the night. Is that what you're saying?
Yeah, nautical. Love that. Two ships passing in the night.
This is Reece and I's first podcast back together after a long hiatus here, so we're getting the rhythm back in. Oh,
dude, the rhythm is there. I don't know what you're talking about. I'm feeling good. I think this was a great episode, honestly, because that's what I just we talked about so many builders, and I'm just like scratching my head. It's this time of year. You see this content float around on LinkedIn. You see it just chatter and pick up, and I'm like, what is this? Why is this constantly a conversation? Like at the end of tax season, I was like, well, what's the actual beef? And I think we accomplished a lot of that. Go ahead, Tim.
I was just going to say, I think it comes down to almost an education piece, right? Like understanding why we need to do it all month, like every month of the year, not wait till the end. I think a lot of builders, to your point, are, we need to do taxes. We should really be working on this throughout the year, but they're not thinking about those monthly insights that they can gain from doing it accurately.
Couldn't agree more, Tim. Couldn't agree more. Do we think we've done that at least enough from an education standpoint on this episode?
Yeah, I mean, I think some type of like SOP would be helpful for everybody to have, of like, maybe we need to write it out. Like, this is why you want to do this on a monthly basis. Here's the additional information that we can derive from doing this. This is why it's going to be beneficial.
Yeah, let's do it. Why don't we do that as part of the blog post we attached to the podcast? Hey, here's a little quick month-end close, what it means, what it helps you with, why it helps. I think we gave 2 examples on the call today. There are other examples we can include in the blog.
Love it.
Beautiful. I think this is helpful. Tim, I appreciate the hell out of you. Thanks for jumping on.
Yeah, of course. Thanks for having me.
Yeah, we'll have you on again at some point, I'm sure. Just talk expertise. Anything else? Any closing comments, Matt? Do you have anything?
Just that at the upcoming International Builders Show, we're having an event at a darts bar.
Hell yeah!
If you want to come on by, what's the bar called again, Reece?
I should know this. How many darts bars are there in Vegas? I know Vegas is darts bar Vegas. Let's see here.
We are registered, so Nick and Julian will be there. I'll be there.
Hell yeah. Big Julian. I missed that guy. I actually saw him in Rhode Island.
Oh.
Cool.
Yeah,
I'm looking. I don't have it here on me. Here we go. IBS 2025. Darts. It's pretty blank. Hang on here. It is happening. We'll get this posted in the show notes. We'll do it in the blog.
We're booth W4155 at IBS. Come on by. We're raffling off 1,000 beers again, like we do every year. And then we're gonna play some.
We'll do like 10. We'll do like 1,000, like, I don't know, Diet Cokes or something. If you're not a beer drinker, oddly enough, there's some people like, yeah, we don't drink anymore. Okay, it's fine. It's good. It's probably a better decision. But come on by the booth. Tim, you found the darts bar? What's the name of the darts bar?
Fight Club.
Fight. Yes. Flight or fight?
Flight Club.
Flight with an L.
Flight. Yes.
As in darts, flying.
Yes. It should be Fight Club.
There'll be plenty of libations, plenty of food, plenty of contractors, plenty of experts in the field. Come on by. We'll drink some beers, some sodas, throw some darts. Appreciate you, Tim. Thanks for jumping on, and we'll see you next time.
Cool.
Thanks, guys. Looking forward to it.